Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris Dearborn. He's Nasdaq's managing director on our market intelligence desk. Chris, what a week it has been. Friday, no shortage of headlines. We were a little bit higher this morning until that Bloomberg report came out that the U.S. is considering limiting American portfolio flows into China, and this is a story that we have heard before.
They've mentioned it before. Again, it's a headline risk item. There's no shortage of headline risk items on the macro and political side. The question really is this going to be one of those items they're going to use towards political end game, especially with the scheduled talks supposed to start next week, or the 7th, in a week and a half? You know, American investment into China have been a huge driver of growth, not just for the American companies, but for the global economy as a whole. Any limitations on that whatsoever imposed by the U.S. government could be very broad-reaching to the entire global economy. So we have to watch this very closely, have to see more details about it to really upon, intelligently on it. But again, the headline risk, it's a risk-off item.
Right. I mean,
and you're seeing that in the markets, absolutely.
And think about what it means to the people who use indexing and portfolio managers and listings and all that.
The A shares just listed. Finally, MSCI only 2 years ago started using the A shares because they were able to account accordingly for investment into China. So that's a huge investment drive, not just for the particular companies, but like you said, those who use ETFs and mutual funds to add risk to their portfolio for companies that are hard to invest into directly.
Well, it's interesting that the administration is taking the tact of investor protection, why Chinese companies don't have the same standards that U.S. companies have in terms of reporting. So I could see the motivation there, but clearly it's got to be tied to what's happening with trade talks.
Yeah, I think it has absolutely tied to trade talks. It's definitely something that they're going to use as leverage. Again, the macro and political headline risks have been the roller coaster ride this market has seen for this entire administration, especially this year since February. And what you have here is just another leg into that saga that's really a shame.
Yeah, well, you know what? I don't know about you, but I'm actually looking forward to earnings season this year, despite how crazy it gets, just so that we can focus on fundamentals and see how trade rhetoric is impacting forward guidance and so forth. Let's take a look at the SOX index, the semiconductors. This is certainly a sector that has sensitivity to these
absolutely. So Brian mentioned it yesterday. We put it in the blog today. What you're looking at here is a chart that has still good legs to it. You had a big concept of value versus growth, and that swing in momentum recently. That's why you had the risk on the smaller and mid-cap names beginning of the month. And what you looking at here is, how is this going to impact companies that are in this index? Right, a lot of the chip makers. You had a big warn last night from one of the larger companies in the index, and it's kind of selling off today. But this chart still looks good. You're looking at a 52-week low to high with significant support. You've come up against resistance 3 times, triple top here, and if this can hold here and continue higher, it's going to have legs. But again, it's not going to be for the independent companies within the index that make up the investment thesis. It's going to come down to the macro environment that they're selling their products into or manufacturing their products. Rare earth is definitely something here, rare earth elements are something here that we have to keep an eye on because that's sourcing for a lot of these companies. If there's issues there, this index could have a lot of headwind. All
right, let's move along. Speaking of small and mid-cap names, the Russell 2000, we're taking it at 52-week on the daily here, our next chart.
Right, so we pulled this together. Again, you're looking at the Russell, and it's actually leaked even more so through here. We're actually accelerated to the downside intraday today. So we're looking at support along the 50, 100, and 200-day moving average. They were actually, after this chart was pulled up only a few hours ago, we've actually broken support at the 200-day moving average on an intraday basis. You don't want to see that happen. You had significant movement at the beginning of the month, hence the lines, the green lines closer to you, a nice dip right there and rally back up. And what you're looking for it to hold that 100-day moving average. It hasn't. Actually, we've fallen below the 50-day here, which is not a good sign for the small caps, and we're falling below the 200-day on a closing average, it's a longer-term trend. But what you're seeing here with the SOX, with the Russell, and with a lot of the other indexes is that there's lower trading volume. So your leakage on light volume. If this sell-off was significant on heavy volume in any of these indexes, that would put a little bit of oomph into the magnitude of the move. However, the volume itself is relatively light. As a matter of fact, trading volumes for this entire week have been light. The only day we had above average volumes was Tuesday on the headline risk. So what you had there really was below average volumes Monday and the rest of the week. Even so, you're seeing the market sell off. It's telling me that there's a lack of conviction in the marketplace, and you're just moving along with the trend. You open higher and you sell off over the course of the day. You open higher yesterday morning, we were looking higher as well into the open, and you sold off over the course of the day. Small caps had a big run. There was a lot of headway into it, sector rotation. Don't see it so much here now.
All right, let's move along and talk about some headlines for next week. Of course, the all-important non-farm payroll data for, where are we, in September?
It is September.
I mean, I feel like we just did our weekly hit last week.
Yeah, it's a big number. We're looking for a constant 3.7% is the consensus average for September. The question will be on the wages and then on the underemployment numbers. Are you going to continue to see wage growth month over month and year over year? The consensus is that you're going to see a seasonally adjusted 1/10 tick lower for the month over month, but the year over year at 3.2% should remain constant. Again, that's important because consumer spend is the all-important factor that's holding this entire market up. And consumer spend is necessary for GDP. It's 2/3 of consumer spend goes to GDP. On the bottom, we had the GDP number just a couple of days ago. Came in line, a little bit weaker on some aspects, but still in line overall with that theme of slowing global economic growth. And the non-farm payroll number, which is preceded by the ADP number the night before, should give us a very good look into it. Again, any macro headlines, any political headlines could trump any good or bad items that come into that report. And what you have also next week, we mentioned, we still haven't entered next quarter season. We still have a couple of consumer names rolling off on earnings. So you have some good consumer names coming out next week that show the health. You have Pepsi, you have Costco. There's a number, McKesson's coming out. A lot of good names up there that can show you the strength of consumer in those individual sectors. So a lot to look forward to next week in a very kind of microscopic aspect. So again, the macro kind of trumps everything, but we'll see what happens.
All right, Chris, my friend, have a great weekend.
You too, Jill.
And Chris will be off from Trade Talks next week as I will be reporting live from the STA 86th Annual Market Structure Conference featuring Nasdaq's North American Head of Market and Trading Services, Tal Cullen. We will be live from the conference October 2nd and 3rd. Have a great weekend, everyone. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.